Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Riiv to receive the top 10 stocks to buy right now. A lot of stocks that were high flyers during the pandemic have been absolutely crushed over the last year or so, and one of the biggest is Peloton. The company made a number of mistakes during the pandemic, including doing crazy things like shipping bikes from Asia to the US to sell to customers at a massive loss, just to get as many people in the door and in their subscriptions as possible. It was really an unsustainable strategy and cost structure, but that started to change about a year ago. John Foley was pushed out as the CEO and replaced by Barry McCarthy, who has a lot of industry experience in technology in particular with Netflix. And this is now a company that could be on a turnaround path if things go right. So I think it's important for investors who are looking for some really high potential but still high risk stocks to look at Peloton and think about if this is the kind of company that can execute on a turnaround plan. In this video, I want to dig into the trends and what the numbers look like. My name is Travis Hoium. Thank you for watching Riiv Investing. Please subscribe here on YouTube for more of my investment analysis in high potential stocks like Peloton. So let's get into the strategy and what Peloton is trying to do. I'm going to start here with the way to think about Peloton as an offering to customers. Peloton isn't just offering a bike and a subscription service, and that's all there is to it. They're really comparing against what you could be doing if you were going to a gym. Now, this is a little bit generous saying that a gym membership costs $300, but when you look at boutique fitness like yoga, Pilates, cycle memberships, these are pretty expensive memberships, and if you stack a few of them together, you can get to $300 pretty easily. So at the very least, we're looking at a competitive price of $100 to $150 on the low end and $300 at the high end. But what you get here with Peloton is after you purchase the bike for $44 a month, you get access to all of their classes and services. I'll get into a few of those a little bit later on, but that's really the advantage of an internet company like Peloton is you can have an infinite library of content for one low monthly price. It's once again the Netflix model. Barry McCarthy is bringing that and adding to it at Peloton. The second thing to look at is the trends on that product level. You can see that they've added a few hardware products, in particular the tread and the rowing machine. This presentation that I'm looking at here is actually from last summer. So some of this information is to be a little bit dated. The rowing machine actually came out after this, but the number of disciplines I think is really important here. 14 disciplines as of last summer, and that continues to grow. So that's something where they're able to leverage the fact that they are an internet company and grow what they're offering without increasing that monthly price too much. The opportunity ahead, these are the total addressable market numbers that a lot of companies give, $828 billion in global fitness spend. But I think the number to look at here is just in the US, there's 64 million gym members, and globally there are 185 million gym members. There are only about 7 million members in the Peloton family, as they like to be called, and 3 million paying subscribers. So there's a lot of growth potential for the company, just given the size of the market there. And here's a look at the modalities or the classes that people are using, as I mentioned earlier. You can see that in 2019, a majority of the people were using just cycling. And there was some strength, some stretching, and some scenic or on the go. This is actually mostly cycling as well. So cycling was over 70% of the classes that were taken. Fast forward to last summer, cycling was less than half. Strength is growing in there, yoga, running. Now you can add things like rowing in there. This is really becoming a diversified offering. This isn't just a cycle company anymore. And I think that's really critical to the company's long-term growth and stickiness with their customers. And here's a chart. You can see the trajectory of the company's connected fitness subscription. This is basically the full paid membership subscriptions. And then this is the number of app subscriptions. So the growth has leveled off over the last couple of quarters, but you can see that it was tremendous growth, particularly during the pandemic. And that's where they really got to scale. And the final chart I'm going to show from this presentation is just the subscription revenue. This is on the left, what you want to see for a company like Peloton. Is that subscription revenue growing? Because that's going to be the high margin piece of the business. And that's what you see on the right is the gross profit and margin on that subscription business. This is a almost 70% margin business. So every subscriber that they add is going to be very profitable. They're willing to sell a piece of hardware at a loss because they think that they're going to add that customer for multiple years at a very, very high margin. So that's really the way that the business works. So what are the trends for Peloton over the last year? They're on a little bit different fiscal year. So Q2 fiscal 2023 actually ended at the end of calendar 2022. So they're about 6 months ahead from a fiscal standpoint. The number that I want to look at here is the second number, not just members, but connected fitness subscribers. That was still up 2% quarter over quarter and 10% year over year. So despite the fact that Peloton's growth has really slowed down since the pandemic started to end, they're still adding subscribers. And I think that shows just how sticky the business is and how attractive it is to a lot of people who are trying to get some fitness in their lives. On the financial side, the first thing I'm going to highlight here is connected fitness product revenue. This is the hardware revenue. So the bikes, the treads, the rowing machines. Revenue was down 52% last quarter to $381.4 million. That's not a huge deal for the business. Now, we would like to see more products being sold. We would like to see them being sold at a profit, which they're not right now. You can see a negative 11.2% margin there. But that's not all that concerning, because what we want to see is growth on the subscription side of the business. Subscriptions are now $411.3 million last quarter, up 22% year over year, flat quarter over quarter. But that's the kind of thing you want to see, because if we go down to subscription margins, 68% last quarter, contribution margin 72%. So that's really where you're getting your profitability, is from those subscriptions. Gross profit was actually down. That's in large part because of the hardware changes that they made, but they're starting to improve that side of the business. I don't think hardware is going to be something that's going to be profitable long term, but it's at least not going to be the same drag on the business as it is today. So take that side with a little bit of grain of salt. What we're seeing here is positives for the subscription business, and that's good for Peloton. The other thing is operating expenses. So Peloton's operating expenses just flat out got out of control during the pandemic, down 20% year over year and 4% quarter over quarter. That is a phenomenal trend for a company like Peloton, who you would like to see have a lot of operating leverage. That means that revenue is growing faster than operating expenses. So more of that revenue is going to be flowing to the bottom line. If a company has positive operating leverage, then any growth is going to be good for the business. So that's why we like to see that subscription revenue grow and operating expenses actually come down. Add all of that up, and the net loss is starting to come down. They are still losing money. They are still cash flow negative, but you can see cash flow was negative $94.4 million last quarter, down from over $500 million a year ago. So trending in the right direction. Again, this is not a company that you're going to buy that's a value stock, but you're looking at what do these trends look like 2, 3, 4, 5 years from now? Can Peloton get to profitability? And I think they're at least on their way there. So the question for investors is going to be, what does Peloton need to do to get to the point where it's profitable? It's starting to really show that operating leverage and starting to be much more like a value stock or a growth stock than it is in this recovery phase today. And I think what we need to see is just a continuation of the trends we've seen the last few quarters. Barry McCarthy clearly knows what he's doing in building a business that has a lot of content. Subscribers just pay a fixed fee, and they're really doubling down on that. They're not cutting costs as far as the number of classes go. A lot of those operating cost cuts were more on the back end or the hardware side of the business. And that's really key. You want to keep those subscribers happy. And that seems to be something that Peloton is doing really well. So over the next few quarters, what am I looking for? I'm looking for subscriber growth. I would like to see a little bit more hardware growth. I'm not worried too much about the margins there. I'd like it to be around break even, but I would like to see subscriber growth at least in the single digits, if not into double digits. And I'd like to see operating expenses stay flat or even come down a little bit. That's how Peloton really starts to get to that point of operating leverage. But I think at the end of the day, this is a company that has a very unique offering. Gyms are starting to open up. There are alternatives out there, but we're not seeing people cancel Peloton in massive numbers. And that's because You can have one subscription for $44 a month and have access to hundreds of classes, dozens of different types of classes. And that's just something you can't do with the constraints of a physical gym. Peloton needs to lean into those advantages. It seems like they're doing that more and more. This is absolutely a high risk stock. There's no getting around that. But I do think the risk reward is starting to be positive for investors. I haven't added shares recently, but is on my short list as a company that could potentially have very high returns, something on the order of 10x. Remember, this is a company with a $3.5 billion market cap. It had a market cap over $48 billion just a few years ago. If it's able to get any of the growth or leverage that we were anticipating a few years ago, this could be an absolute home run stock. I'm not selling my shares and potentially looking to add more, especially if we get another quarter or two of data that shows that the strategy is going well. But I'd love to hear what your thoughts are on Peloton right now. Leave your comments in the comments section below. Subscribe to Riiv Investing here on YouTube. Thank you for watching. I'll see you here next time.